You know, it's a question I hear almost every single week from fellow collectors, a real enthusiast dilemma. Is now the right time to finally buy my first Patek Philippe? Whether you're dreaming of a legendary Nautilus, a versatile Aquinaut, or perhaps one of their incredible complication pieces, let's be honest, this isn't just about acquiring another watch. It's about stepping into a lineage, into the world of what many consider high horology's most prestigious name. So today, we're going to dive deep. We'll look at the data, explore the nuances, and really try to decode what truly matters when you're making that monumental decision. Stick around because we're tackling the Patek Philippe question head on. Welcome back. My channel provides independent market analysis. I'm not a watch dealer. I don't do paid posts or sponsorships. I buy my data from watch charts, including the market risk data we'll discuss today. So, we've acknowledged that big question. When do you jump into the Patek Philippe family? Before we can answer that, we need to talk about something crucial, something we call the Patek Premium Reality. What does this actually mean when you're at the counter, or more often, when you're navigating the secondary market? Let's take a look at a stunning and very popular piece, the Nautilus Travel Time, reference 5990 in rose gold. Now, this isn't any ordinary luxury watch. It is indeed a Patek Philippe. The retail price is already pretty rarefied air, sitting at about $123,000. But here's where the Patek story gets really interesting. What we're seeing in the data is that the current market isn't just, meeting the price. It's demanding a significant premium on top. How significant? Well, for this particular piece, we're looking at an additional $108,000. Let that sink in for a moment. That's not just a little extra. That premium alone is essentially the cost of another highly prestigious timepiece. You're almost buying a second Patek with the premium paid for the first. This is a dynamic we see across some of their most sought-after models. It really underscores a key point. When you're considering a Patek Philippe, especially one of the icons, they're not just evaluating the watch itself, its complications, its finish, its beauty. You're also navigating a very unique market landscape. A landscape shaped by incredible demand, limited supply, and a legacy that carries immense weight. So, if this is the reality for some of the most coveted pieces, how does this influence our approach? And does this premium reality apply to all Patek Philippe watches equally? Let's consider a different kind of Patek. Take the Aquinaut Travel Time 5164R. It's a fantastic piece, beloved by many, and described here on our spectrum as a safe entry. Notice its retail price around $63,000, and assigned risk profile score a relatively low 23. What contributes to this? Well, as the data suggests, factors like its position as a steel sports model, which often means high market liquidity and stable demand, coupled with a classic enduring design, tend to make it a more predictable proposition from a market perspective. Now, let's look at the other end of this spectrum. Feast your eyes on something truly exceptional, the Nautilus Hall jewelry. Okay, I'm sure I butchered the pronunciation. This is Patek Philippe showcasing its artistry in gem setting and high watchmaking. The price point, as you can see, is significantly higher. We're talking about $428,000, and notice its risk profile score 76, meaning it has a much higher chance to drop in price. Why such a difference? What we're seeing in the data here is that pieces like this, often described as high complexity or highly specialized, operate in a different market dynamic. They might have a more limited market of potential buyers, especially for a piece like that. Their complex features can sometimes mean a longer time to resale if needed, and of course, the higher entry cost itself is a factor. Now, these aren't lesser Pateks by any stretch of the imagination. Far from it. They are horological masterpieces. But from a pure market entry and risk standpoint, they represent a different set of considerations. So what truly makes one Patek Philippe a safer or perhaps a more straightforward entry point than another? The answer, as we're starting to see, lies in understanding these unique market dynamics within the brand itself. The interplay between material complexity, demand, and overall market perception. This naturally leads us to wonder, if there are these varying risk profiles, is there a sweet spot? Is there a smart entry strategy that balances prestige, desirability, and market dynamics? Let's talk about it. We've seen the dazzling premiums on some models and the risk profiles across the Patek Philippe landscape. This might lead you to think that getting into Patek is an impossibly complex game. But what if I told you there might be a smarter way, a path less traveled? You see, your first Patek Philippe doesn't always have to be the one with the longest waiting list or the most sensational headlines. Sometimes, as we like to say, the wisest entry point is the one that isn't on everyone's immediate radar. We're talking about finding a hidden gem. Let's look at a brilliant example, the Nautilus 5726 1A. This is the annual calendar with moon phases in stainless steel. What makes this piece so interesting as a potential first Patek? Well, the retail price is noted at around $57,000. Now, what we're seeing in the market data is a current price around $98,000, $99,000. Yes, there's a premium, but look at its risk score, a relatively balanced 30. This piece offers that iconic Nautilus design, a very useful and highly regarded annual calendar complication, all in the ever-desirable steel. It delivers a huge amount of Patek DNA and watchmaking prowess, perhaps without some of the extreme market volatility that we see elsewhere. There are Patek pieces that are underwater. It's a sophisticated choice, a collector's piece that often flies a bit under the hype meter. To understand why a model like the 5726 can represent a smart strategy, it helps to look at how different Patek lines tend to behave in the broader market. What our data is showing is quite revealing. If we look at the Nautilus collection as a whole, we see an average premium around $47,000, $48,000. It's labeled here with high demand and medium stability. That iconic status definitely drives desire. Then there's the Aquinaut collection. Here, the average premium is a bit lower, around $41,000, and it's often characterized by stable demand and low risk, making it a popular and relatively predictable entry point for many. But now, look at the complications line. This is where things get a little scary. The average premium here is actually showing a negative $51,000, indicating that on average, these pieces might be acquired below the original retail on the secondary market. They're marked as a variable demand with high complexity in terms of market dynamics. This doesn't mean complications are bad investments, absolutely not. They are the heart of Patek Philippe's watchmaking identity. But it does tell us something crucial. The market values different aspects of Patek's offering in different ways. The prestige of a high complication doesn't always translate directly into the same kind of market premium we see with their steel sports models. So a piece like the 5726, a Nautilus with a complication, kind of finds a unique sweet spot. It has the Nautilus allure, but with the added depth of an annual calendar, all while maintaining a more tempered market position compared to its simpler, time-only siblings. This brings up an important question, though. If complications at a category behave this way, what does that mean when you're looking at a Patek that is all about its complex mechanics? How does that complications equation really balance out? This really brings us to a fascinating aspect of the Patek world, what we might call the complications equation or even the complications paradox. It's a common assumption that the more intricate, the more horologically significant a watch is, the higher its market value will soar. But in the nuanced world of Patek Philippe, the data suggests that more complicated doesn't always translate into a better financial investment, at least not in a straightforward way. Let's take a truly magnificent piece of watchmaking, the Patek Philippe Inline Perpetual Calendar reference 5236P in platinum. This is an incredible demonstration of Patek's ingenuity. Its retail price is around $141,000. However, what the current market data indicate is a price closer to $86,000. That's a market delta of approximately minus $55,000. Now, look at its complexity level. It's rated very high, as you'd expect for such a sophisticated movement, yet its risk score is a modest 30. This specific perpetual calendar, a pinnacle of watchmaking art, tells us something crucial about the balance between sheer horological prestige and current market realities. It's a breathtaking watch, no doubt, but its market journey is different from, say, a steel sports model. So how do different types of complications fare in terms of value retention and market premiums? This is where the equation gets more detailed. If we look at the average market premium by complication type, the insights are quite startling. For annual calendars, which we touched upon with the 5726, they are noted as medium complexity and show a strong average market premium around $42,000. The market clearly appreciates their blend of utility and watchmaking. Then we have chronographs. These are also typically medium complexity in this context, and what we're seeing is a very strong average market premium around $63,000. That's a clear and robust demand. But now let's consider perpetual calendars. These are designated as high complexity. The data here points to an average market premium of minus $55,000, labeling their market performance as weak in this specific snapshot. What this tells us is that the market's appetite for complication truly follows its own logic. It isn't a simple ladder where more complexity equals more premium. Factors like material overall demand for that specific type of complication, production numbers, and aesthetic trends all play a significant role. A grand complication is a piece of art, a testament to skill, but its journey as a collector's item in the market has its own unique rhythm. Understanding this complications equation is vital. It helps us appreciate these incredible machines for their intrinsic worth while also being realistic about their market dynamics. So, after all our analysis, how do you actually choose your first Patek? It comes down to a clear framework. First, model selection. Are you after a high-demand sports model, often with a premium, or a classic complication where horological art meets a different kind of market dynamic? We've seen how these paths can diverge. Next, material choice, steel, gold, or platinum. This fundamentally impacts price, market perception, and as we've noted, even the risk profile and the market timing. What we're seeing in the data right now on May 8th, 2025, a slight cooling in sports model premiums. Knowing the current climate helps you gauge your next move. And finally, your collection strategy. Is this a one-time purchase or the start of a larger Patek journey? Your long-term vision really shapes that first crucial choice. The takeaway here, the right entry point always balances your personal desire with a sharp understanding of market reality. Choose wisely. See you in the next video.